Welcome back, everyone. This is Thomas Triple T Tie with another new bullish crypto analysis. Before we dig in, remember to smash the like, ring my bell, hit subscribe, and leave a comment anytime during this video when you find value. Let's dig in and take a look at Bitcoin and how it's doing on the weekly chart. We'll start out with the heat map for the crypto market. It's red. Bitcoin is down 4.45. Dominance is trending down. It's currently at 41.72. Ethereum is down for just a tad above 4%. Everything's down. ADA is down to 94 cents, down 5.58. I haven't seen it this low since July of 2021. It's a good time to start thinking about layering down. All right, let's go to the chart. This is trading view. Let me maximize this out. Here we go. Whoa. What happened to the other guy? This guy jumped. Okay, here we go. That's not what I want. There we go. So trading view, last time we visited the weekly chart was about 5 days ago. I was going to redo this chart tomorrow, but being that we're going to close the week out, I want to give you an update. So previously we had this ascending triangle here, and Bitcoin broke out of that below the ascending triangle support line. In fact, it broke below this support level, the W13 support level here at 40.7, and that was a critical level. Broke through that, and I discussed that on the daily chart yesterday. Where are we now? So it's looking pretty bullish, obviously. Bearish, obviously. Russia's escalating threat to invade Ukraine continues to weigh the market down. Early in the week, they said they were pulling some troops back to base. The market had a slight upward tick in both the equities market and also the crypto market. But that was short-lived. They, in fact, built up their troops at the Ukraine border up to 190,000 troops there. And the market sentiment has been on the downtrend ever since. The current point is right here at 38.4K roughly. Bitcoin dipped as low as upper 37K for the first time in a bit. So in a couple weeks. The bull market support band. This is the top of the band up here. This is the bottom. We're heading. Bitcoin is heading toward the bottom of the Bollinger Band, and it's in just below. Well, it's between the middle basis of the Bollinger Band here and the bottom. So it's right here, and it's also trending down and away from the bull market support band, which is this gray ribbon here. And all those are bearish signals. The next support line is 36.5K here. And as we'll see on the heat map, that although that was a strong support level for 3 weeks back here and here over here and resistance over here, the heat map doesn't show that. In fact, the heat map doesn't show much support currently at all there. So if it retests to this level, it might break right through it and gets to the 35K zone, roughly 34.9 here on this green right there. The other level that we want to pay attention to is this highly traded zone at roughly around 33.5. This red line that goes horizontal, that's the had the most volume in this zone here, which goes back to April 2000, if I can get it, 2020, March, April, yeah, March 2021. That's the most trade, most volume price zone. Let's take a look down below. What do we have? The KDJ line. All three lines were fanning up 5 days ago, and they have changed course, and they're trending down. At least two of them are trending down. The white J line and the blue K line. And I gave it a bearish sign here. Previously, it was at 63 5 days ago. Now it's dropped. The white line has dropped to 38.7. So that's a significant drop. You also want to notice that it's near the bottom of the range here. The top is right up here at 84, 80 roughly, and the bottom is down here roughly at around 20. So it's nearer to the bottom of the range. The MACD continues on its bearish histogram trend here. It's red, the red bars, and the white MACD line. It was flattening out 5 days ago, but ever since it's been trending back down again. In fact, it went from negative 1,792 down to negative 2,282, and it printed another reddish histogram bar, which is this one right here. But you notice it's trending more pinkish than it is red, and it's also tapering. So what it'll do is eventually it'll taper down shorter and shorter and flip to the upside. When that is, we'll see. It's been how many weeks now? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. It's been 12 weeks. These are kind of pinkish, but we'll just count it here. It's been 12 weeks. And this was back in November 29th. Let's go down to the RSI and its friends down here. The red RSI line here, it was kind of flat, trending flat, but now it's all three of them, the red RSI, the CVD, and the white MOM indicators, they're all trending back down. They were trending slightly up or flattening out. And you can see that the RSI line went from 47.6, which is just slightly below the middle of the RSI range, down to 41.2. The Aqua CVD went from 4.052 million down to 4.034 million. And the MOM indicator went from negative 5.6 to negative 11.8. So they all have been dropping in the last 5 days. And that's bearish. Got a little bear here. Down here at the spot to derivative basis delta, I'll continue to cover this going forward. This shows that the spot is trading at a premium. That normally means it's bullish. However, as you can see from here, the trend's been down. What this is saying that is when it flips to the other side, it'll be an explosive flip. I've covered this before, so I won't cover it here. But the last week it was tapering here. Looked like it may flip, it may go to zero and then flip, but now it actually widened. The spot derivative delta continues its longest multi-year trend and decreases from negative 0.00027 to negative 0.00066. So it went down further. What we want to see for Bitcoin to flip to the upside is this thing tapering down, and then it flipped to the opposite side. As you can see back here, it was in the negative section, then it flipped, and guess what? Boom. That's what we're going to build up to. When that is, that's hard to say. But that's what it's building up to, that bullish signal. Let's take a look at the heat map and see where our levels are. You can see from, this is not going to change. Up above here, there's not any large cell walls up here, so I won't cover that. But you can see some major cell walls down below at between 34.5K and 35K. We have a large zone here of buy walls. And that's roughly about 444 or so right in this area. And then below that, we have the 30K zone, and that's 543 in size, and 25 here. But these we got to get through here first. So this shows that even though historically we have a strong support zone at 36.5, the heat map shows us currently that it's not there. There's not much there at all. So that leads me to believe that more than likely we'll drop into the 35K zone rather than having support at 36.5. And furthermore, on the other chart, we saw the 34K zone right here. Actually, 35, that's one of our support zone on the heat map. Yep, 35 is right here. And then we have the one here at 33 for the highest traded volume area. Well, on the heat map, we don't see that at all. It's actually at the 30K mark. So these are this is current. These are historical. So we want to weigh the two there. I hope this added value for you, and if it did, feel free to smash the like, ring my bell, hit subscribe, and leave a comment in the YouTube section. Appreciate your time. I'll see you in the next video later today. Peace.